All right, hello everyone. My name is Gaia Manoukian, and I'm happy to welcome you today to the third and last webinar in the series of 3 sessions focused on the digital transformation of MFIs. We have a really exciting panel for you here today, but before we get started, I'd like to quickly go over the webinar logistics. This is an audio broadcast, which means your microphones will remain muted throughout the session. Please note, however, that we want you to get engaged. You may do so by submitting your questions and comments in the bottom right of your screen through the chat box. And when you do so, please include all panelists or all participants, select all participants to make sure we receive your questions and comments. And then in the end, we'll address them to our speakers. The webinar is being recorded. The session will be shared with all of you after, and you may share it with your colleagues and friends in the network. And finally, before you log off at the end of the webinar, please stay around for 1 minute to submit a poll to answer just 3 very short questions to help us improve our webinar series. And with that, I'm going to hand it over to our moderator, Frieder Bjorman.
Thank you very much, Gayane. Warm welcome as well from my side. As well, very excited to moderate this panel. And we start with a round of introductions of the panelists. I will briefly start with myself. I'm the co-founder and a partner in Finbits, a company specialized in supporting MFIs and SME banks in digitalizing internal processes. And I'm particularly interested in hearing what the IT companies can contribute to this interesting process. I think the next in line is Kalin.
Yes, thank you, and hello everybody. My name is Elena Rado. I'm CEO and co-founder of Software Group, a technology company that works around the globe. Especially, we are focused in digitalization of financial institutions, and main focus having customers in more than 70 countries and having kind of holistic approach to what needs to be done. So very happy to be part of this panel and discuss the details later on. Thank you.
Yes, thank you. So glad to be here with you today. I'm Christophe Botagnol. I'm representing PCs. We are a company based in Macedonia and Ghana, providing digitalization expertise for MFIs and banks. And we are doing management consulting for digital strategy, due diligence, project supervision, and everything which is related to digitalization. And as well, we are providing services for integration with digital channels such as card, mobile, external service providers. We are a young company, but most of our staff are 15+ experience in digitalization processes, including me, who is also one of the founders. And we have a lot of experience working with MFIs, and we have a lot of experience with the product themselves, the banking products, the core banking system, and this all over the world, Eastern Europe, West Africa, Central Asia, and so on.
Hey everyone, I'm Ashirul Amin. I'm a senior associate at BFA Global. It's a consulting company that uses finance, technology, and data to craft solutions for underserved populations in emerging markets. We are headquartered out of Boston with offices in Nairobi, New Delhi, and Medellin. I personally head up the data analytics unit and also work on digital transformation of financial service providers and also on incumbent fintech partnerships.
Hi everyone, I am Elena Rado, representing Conecta. Our purpose is to accelerate the interconnection of the financial industry worldwide, granting everyone frictionless access to financial services. We believe that digital transformation is way beyond technology and requires a mindset shift, and we are going to be talking a little later about that.
Yeah, thank you very much for these first words and hint at what you're going to talk about, I think, already. I would like to kick it off with a short overview and maybe setting the stage for the discussions later on. We at Finbits have a certain model where with which we try to chart and structure a bit the challenges around digital transformation. We usually, and that is on the left side, this building with the columns. We usually have a look at the delivery channels as part of digital transformation. This has been discussed, I think, quite extensively in the last webinars already. This includes mobile payments, agent networks, chatbots, and similar front-end solutions to digitalization. Then the second element are the operational processes, the internal mechanisms of an MFI, which includes the digitalization automation of certain processes, the centralization of workflows, and as well as the better access and approach to risk optimization. And then overall, this translates into specific business models where customer intimacy can be redefined, data-driven decision-making is in the position to inform management and lead to better decisions, and as well performance management in this new world of digital possibilities is expected to improve. In Finbit, we are focusing on the middle column, so the operational process optimization, and the basement or the bottom of all this is obviously a very robust IT infrastructure. This is where we have the red frame now. And this is as well the topic of today's webinar, to see in which way IT companies can support and which role they play in the implementation of digital transformation processes. For MFIs, this is usually a tricky topic in many cases because there is by now an overwhelming offer of fintech solutions where non-typical microfinance companies like MNOs seem to be in an advantage and in certain areas dominate as well the business. There are new forms of competition MFIs have to adapt to, so therefore definitely strategic decisions to be taken. They're very often, and it is now coming closer to the issues that we are dealing with here, to aging legacy systems. And this needs to be integrated with new technology, with new solutions, which is per se not an easy task, but as well new operational risks emerge, which need to be managed, and then very often in close cooperation with IT companies. So in general, a world a bit of uncertainty, and I think there's an important element is the cooperation between MFIs and IT companies, which is a lot more important now than it used to be maybe in the past. And hence as well, I'm very interested to hear what the IT companies presented here will have to tell from their experiences, but as well maybe answer some of the questions that are the most imminent and permanent of MFIs and some of the participants here in this webinar. That much from my side. I would like now to come to a first round of opening statements of the panelists. And I would like to start with Colleen. We know that Software Group has worked with many microfinance institutions on digital transformation. And I think it would be interesting for us to know what kind of first steps MFIs need to take, what questions they need to ask when starting the journey, and whether there is such a thing as being ready to go digital, and how MFIs can maybe assess their own readiness in this context. Please, Colleen.
Thank you. Yes, actually, we have extremely extensive experience with microfinance institutions around the globe, literally on all continents. I try to kind of synthesize everything in one slide here on the point of the question you're raising. To me, still many of our colleagues that are so busy with dealing with the problems that they have in the field with the various things that are coming from environment and operations and clients or partners, somehow are not yet on the level to step back and really look at what is their digital strategy. And of course, we are all busy. There are so many things happening, but we still do see attempts for digitalization which are related to, we have this process or products today, and we want to digitalize them. But actually what they're looking at is simple automation of existing products and services, where to us the biggest mind shift, and I'm here fully agreeing with Helena, that it is requiring a mind shift. It is requiring of stepping even 3 steps back and looking at way bigger picture. In most of the cases, that strategy actually is about rethinking the products and the services. Because many of them, as they were in the past, they are related to either implying manual operations, human interventions, a lot of paper, etc., etc. Where the truly digital products, they are designed to be marketed digitally, sold digitally, maintained digitally to the customers. And of course, here many of our colleagues are immediately raising the questions like, are we going to lose the contact with the clients? Are we going to lose the touch of the field and the pulse of what's going on? Actually, of course, these are very valid questions to be raised, but there are many ways how we do both. In all the cases, looking at how we want to provide products and services to the market to be fully digital, is an exercise that is underestimated big time at the moment. And one other thing that, in my opinion, everybody should do before they start talking about the next steps, which here are shown on the picture, like what channels to use, what process, do we have the human capacity to do that change and everything else, is actually, do we have a business case? Because many ideas are great, they look good, they sound nice, they are actually going to be helping a certain a portion of our clients, and everything looks great, except that they don't have a sustainable future, or they don't have it if they are executed in a particular way. So business case and actually rethinking the existing products and services is the absolute immediate step after having, or let's say, integrated part of the digital strategy. And then, of course, we need to have all the components under that, including the business environment, which is what's the competition doing, what's the regulations, what is the true customer needs. Sometimes if you actually interview the customers, because they don't know what is possible and how that looks like, they may not really tell you the actual things that can be done. Do we have the infrastructure, and do we have the right partnerships? And one other thing that is really also underestimated, again, it was already mentioned, that the IT part of the project is probably 30% or 40%. Yes, we need the platforms, we need the environment, we need the integrations, we need everything to be in place. But actually, the execution is completely different thing, and especially in many cases, the adoption of those services and the usage of the service or the products from the target customers is dependent on, do we have the right engagement and marketing plan? These are things that actually should not be underestimated. That's why I tried to put a slide with all the, in my opinion, important components that needs to be considered. And I'll use the moment to answer another question that has been raised on the previous webinar. I don't know if you're seeing my next slide. There was a kind of a implying that there is no such kind of thing as digital readiness for MFIs, where we kind of totally disagree with that. Actually, it is super simple in our opinion, and we do agree with the components of how we reach to that kind of thinking, that the world is super fast changing and it's actually accelerating, and we have no idea how it's going to look even 2 years from now or 3 years from now. But our opinion is that if the organization do adopt a platform which is considered like a toolkit for the innovation and is able to respond very quickly to whatever happens on the market almost. Of course, we are not implying here magic is possible, but there are very practical ways how we can be having, we call it future-proof platforms, where time to market is measured by months or even weeks to come up with a new service or platform or product, sorry. This is what we believe is the kind of the strategically right approach or direction for most of the MFIs. Only then they're going to be able to cope up with raising competition, with raising up more and more regulatory requirements, and respond to the fast-changing needs for so many reasons of the expectations of the markets and things like that. And this is not only possible, but it's already done in quite a few places. And very quickly, just to mention that in the heart of what we call like a platform approach is usually something that is orchestrating all the channels, all the back office systems, and all the integrations to third parties. And usually it's called different ways in the different regions, but financial middle layer is probably one of the kind of common names which is recognized from Latin America all the way to Pacific, meaning passing through Africa and Asia. They're next to each other from the other side of the world. But these middle layers are the things that are managing the APIs. They are the ones that are opening the ecosystems and making the platform approach so powerful. So I think that's probably enough for me. And I'll be happy to answer any questions later on. Thank you.
Thank you very much, Kalin. Very interesting, especially I think as well this interaction with management and the and the share that management and as well the business model has. And I think this leads very well over to the topic that Christoph we will ask him to talk about. As he has already talked about the critical importance of cooperation between IT and business for successful digital transformation. And would be interested if you could talk a bit more about the need for such a cooperation. What challenges are there? Which challenges can be anticipated? And what are the solutions that you propose to offer?
Thank you. So as Kalin described in this first slide, the strategy for your digital transformation is really a foundation. But he also mentioned that the problem can start coming in terms of execution. One of these challenges when executing your digital strategy is really these problems that sometimes the business side of the strategy and the execution side, the IT side of the strategy, can have issues with communicating with each other. And this is a problem which I've seen many times in my experience. And these have several reasons. So one of the main reasons, the first one is really that IT people and business people have very different mindset and very different view on how to apply this digital strategy. So the first point in terms of this different mindset is really that the business is usually having a very flexible view on how this digital strategy should be implemented, and they are more looking at where they want to go, when for IT it is really needed to have very precise modus operandi and how this digital strategy should be implemented. And this creates problems because it is then very difficult for IT to just take this flexible approach and transform it into a precise approach that can be communicated to programmers, for example, or for implementers. The other point is really this big picture view against digital. So it's an extension of this previous point, that the business really sees the big picture of what this strategy is about, but for IT, they don't usually care too much about what is the target, but more about, okay, what will I need to do in order to achieve this? And if this is not described in the strategy, then it leaves a lot of room for interpretation. It leaves a lot of room where actually the end result will not match what the business people will want. The next point is client orientation versus technical orientation. The business side usually really think about the client, what the client wants, but once again, the IT don't really have contact with any client, so for them it's something very remote, something that they don't really understand in their daily work, because they mainly have communication with the people internally in the institution and not so much with the client. And this makes it that things that the business will see as important, because they know that that's the client would want, that will not something that will be obvious for the IT part. The last point is this contextual mindset versus sequential mindset. So in many of my discussions with business people, when discussing about digital strategy, usually you start speaking about a specific product or a specific area that needs to be digitalized, and then the discussion goes a bit all over the place, where, oh, you start discussing about this, and then that makes them think about this, oh, but we can add this for this client will be happy, and so on. And that makes it very difficult for IT people to put this into a workable framework, because the digitalization of a process needs really to be, okay, this is the task that needs to happen, then this is the task that needs to happen, and then if this is happening, then this is happening. So this is really something that is difficult to transform when the IT person who is on the other side doesn't really understand the business process as such. And yeah, really, like, these discussions are very complicated in this sense because of this different mindset. And that creates many obstacles. And these communication obstacles, so they are derived from what I spoke about, and they are mainly this I try to summarize them into these 4 points. So the first point is assumptions. So in many of this discussion about how to implement a digital strategy, there will be many assumptions from both sides. And the business side will assume that the IT side knows about the business case that is presented for the digitalization, and then will assume that they will make some change, which they will implement some things which for them are obvious. For example, they will think that, okay, all our clients should have a client category, which for sure is obvious, but for IT will not be obvious, because they were not really working with this process, and they will not really know that this is a very important information. Then the second point is expectations. So that's also derived a bit from this previous point. As they have made certain assumptions, they will also have certain expectations how things should function in the end product. And therefore, when the result will not be there at the end, then there will be really issues, because in IT, when things are already done, and then certain things were not said before, it's sometimes very complicated to change things. And therefore, that will be a big issue when the end product will be finally in the end of the business. The next point is perception. So as IT is a very technical type of work, it's very difficult for business people to perceive really what in IT is the core issues and the core concerns of the technical people. And the other side is also true, as IT usually doesn't have much business experience with working with the processes, they will not really understand which are the issues that the business people are caring about. So you probably have faced this in your daily work with IT people, where issues which are happening in the branch are very pressing for the business people, but then the IT doesn't seem really to see this as an important issue, and therefore it really creates these problems of people getting frustrated because they don't feel and they don't perceive that their problems are attended. And from the IT side, they have technical issues that they cannot really explain to the business people because it is too technical for them to understand. They feel frustrated that they don't understand. Yeah, you know, we have a problem with the network, for example, and therefore that's why it's not working, so I cannot do anything. But then for the business people, that's for them not very relevant, that they want this to function. So all this like increased frustration and can quickly lead to issues for the project itself. And the last point is something that I'm sure you all have been facing. This is a problem of assessment of the task. So I've been in my career many times been asked for a certain change in a process, digitalized process, or in a product, where the business people will think like, oh, okay, this is not a big thing to change, just make this small change and it will be fine. And then IT is coming and saying, oh, no, that's a big change, it changes everything. And on the other side, it happens sometimes that the business thinks that, okay, I want a really big change, but actually when the change, when they come to IT, they just say, oh, okay, this I can do in 5 minutes. And this is because there is a very difficulty of this assessment of what are the weight of certain tasks within digitalization of processes. Then I will give you now a solution for this problem. So this is something that starts to be a bit more prevalent in certain institutions, but there is still a lot of institutions who don't have this type of profile. This type of profile is business analysts. So these are people who have experience in business and who have experience in IT, and they can really do this interface between the two, and they can really help your institution in digitalization in a very, very big way. They can help them because first they can, as I said, a lot of problems come from assessment, and here these people, as they have, even if they don't have a deep understanding, they have enough understanding to know that, okay, this issue can be really easily tackled, and they will really be able to evaluate that the efficiency gain for this on the business side is very big, but on the IT side it's a very, very small issue to attend. Another issue is jargon. As you know, lots of IT people are using very technical jargon, but I must say that also on the other side, business people also use jargon that are not really always understood by IT. And this business analyst will allow you to fix this issue of translating this jargon, which is in lots of cases not so complex to understand, but like if people don't mention that they don't understand it, then it will just go unsaid and it will create problems down the line. They can also fix this problem that we spoke about the big picture, by really having the discussion with the business people who want a certain digitalization, and then transfer this into a task plan which is directly absorbable by IT. And finally, they can really identify bottleneck and point of failure within your institution in order to see like, okay, sometimes this bottleneck and point of failure, and most of the time actually they are mixed of technical issue and business issue. So they will be really easy for them to identify exactly what is the problem within this and how they combine with each other.
Christoph, may I ask you to try to close your
as the last point,
we're running out of time a bit. Thanks.
It's very difficult to find this kind of people, so you should train them within your institution by taking people who have certain tendencies to be able to do this kind of work. And sorry for being long.
Okay, thank you very much. Definitely interesting topic, the interaction between IT and business. I'm sure we're coming back to that later. I would like now to come to Ashirul and the experience in the BFA. You have published in a recent publication on pioneering cashless microfinance in Bangladesh, where you share an experience of the Sajida Foundation, which turned to mobile money for collecting loan repayments and savings as a means to cut costs and improve customer experience. And there, due to a lack of integrated systems, a middleware had to be created to allow data to flow. Could you talk a bit about the process of creating this middleware and how it works and what challenges you encountered in the process?
Sure thing. Thank you, Frieder. It's a pleasure to join this panel today and reflect on the implementation of a middleware software within MFI. Colin, thanks so much for the introduction to this concept. That was great to build this off of. So let me start off with some context. Sajida Foundation is one of the best-of-class MFIs in Bangladesh. They have over 300,000 customers, over 200 branches, and they've got a long history of undertaking innovative projects related to financial inclusion and improving livelihoods. And you may have actually, if you joined the second webinar, had a chance to hear from the Sajida Senior Director, Fazlul Haq, who was the champion of this project over the 2 years that it took place. So Sajida's as a brick and mortar as of an MFI as they come, right? They have thousands of staff members managing tens and thousands of groups using processes that are cash heavy, paper-based, and they use a decentralized MIS. So in 2016, as part of a MetLife Foundation funded optics project, we decided to look at DFS, Digital Financial Services, to see if we could make cashless transactions a thing at Sajida. There were the usual benefits: increased productivity, efficiency gains, fewer errors, no theft. But it also felt like the time was right? So mobile operators in Bangladesh had achieved a national footprint with more than 100,000 agents. Sajida itself was looking to future-proof its operations given the increasingly digital world and the changing tastes or desires of their customers, but also the competition that they faced. The market was telling us that there was an opportunity because clients were opportunistically using mobile money already with Sajida. And frankly, no one in Bangladesh had actually quite done all three before: disbursing loans, collecting installments, and collecting savings, although there were multiple MFIs which had done one or two of those. So the challenge itself was also a motivation. So over the next 4 months, a middleware was developed in partnership with a local software house, Entitas, that bridged Sajida's MIS on one hand with those of Rocket and bKash on the other, and those are the two major mobile money outfits. And the middleware, as Callan mentioned, it serves as a layer of abstraction so that the MIS would only have to be touched once, but then we could add as many service providers as we wanted on the other side and do all kinds of interesting things. So I won't bore you with the technical details, but I think two of the things that were really cool was we actually ended up creating an open API for Rocket, one of the bigger offerings from one of the larger private banks in Bangladesh, that would allow transactions to take place with Sajida as a counterparty. But the other one was the enabling real-time transactions in a decentralized MIS using a nifty public-private key partnership encrypted system that would allow each of the decentralized 200 branches to communicate with the middleware. So I thought those two things were quite interesting as part of the implementation. Now, the impact itself was very, very clear, right? It changed life in every single branch that went cashless. The biggest impact was, of course, on the customer. Instead of being stuck in these groups for an hour every week, they could now pay at a time and place of their choosing. And so as you can see from the graph, or maybe if you can, 60% of the folks chose to pay outside the 9 a.m. to noon window when group meetings would normally be held. And it would start as early as 5 a.m. and go as late as midnight, depending on when the shops are open. And people also chose to pay different amounts at different times, like the larger amounts were coming in the afternoon, because those were the small business owners who wanted to make their money work for one more day. Of course, Sajida benefited too. Field officers no longer had to carry cash around or spend hours counting it. Their back-end operations, cash handling, bookkeeping, auditing, all of that became much more efficient, and they had real-time data to take decisions on. And so as the project was ending in 2018, the middleware was allowing 8,000 clients to do about 20 to 24,000 transactions a month. So all of that sounds wonderful, right? Well, it was a 2-year journey, and it was chock full of iterations, tweaks, lessons, setbacks, recovery from the setbacks, as I'm sure many of you are familiar with. So let me share some of those with you as our learnings, if you like, because there's a lot that we learned and Sajida learned as part of the process. And these are the 5 major ones. The first is that, group meetings are central to how microfinance operates. And so this clearly affected their role, because they were no longer a cash collection point, but they had essentially they were doubled down in terms of the social role of cohesion that they provided. Because one of the feedback was, if the groups were gone, field officers would no longer be able to be in touch with members, get character references, recruit walk-ins. But then, of course, the cashlessness did not require as many group meetings anymore. So what Sajida did was they made group meetings from a weekly affair to a monthly affair, trying to straddle both those things. The second is that the middleware actually accommodated both mobile money and over-the-counter transactions, and it turns out OTC is much more friendly for non-habitual mobile money users and frictionless as well. So the program opted for that, even though we understood that it would potentially delay the inclusion of these customers into a digital ecosystem. Third, the middleware allowed for massive productivity gains in Sajida, but it also brought costs along with that are associated with the mobile money rails. Right? So all things considered, this cost at best made the whole system break even. So the takeaway is, even though the middleware itself provides incredible efficiency gains, because you don't control the entire value chain, there are other costs that can become very real and very large that one has to deal with. Fourth, at some point in 2017, the regulators decided to throw in a curveball or a googly, as they tend to do, and drastically lowered the daily transaction amount cap. And it effectively made disbursements impossible, because it required customers to come back on multiple days to take the entire amount of the loan out, which of course required corresponding changes to the program. And then perhaps finally, this is the most subtle, but also the most impactful or more important thing. Field officers had to be conditioned to a new normal, because they were no longer servicing agents, but more recovery agents, right? So all the funds are actually coming back through digital, and so they're only seeing the delinquent clients, if you like, who they have to follow up. And so a mental shift was required that even though they were not handling the money, it was still coming back okay, which was done through portals and other information sharing outfits. So anyway, as the project ended around 2018, Sajida continues to maintain the middleware. My understanding is they've pared it down a little for some of the fully digital branches, but they're also using this to service additional loan products, and are now looking at creating cash light branches with some involvement of the middleware. Overall, this was an amazing opportunity for us to work with a highly motivated team led by Fazlul, and his team included IT, business staff, field staff, in a way that solved a lot of the obstacles that Christoph had noted just a little while earlier. So I think I'll end the presentation by saying that I think Sajida really is a case study that showcases how traditional MFIs can leapfrog into the digital age with just the right kind of digital transformation. Back to you, Frieder.
Thank you very much, Shiro. Very interesting and apparently very exciting project you had there in Bangladesh. I think we'll come back to that later in the question and answer, because it provides quite some topics for discussions. I would like to continue now with Helena. And FinConnector has a track record of some successful experience in Latin America as well. One of them being the only bank in Honduras specialized in microfinance, Banco Popular. And that was as well a topic of the last webinar. Could you talk a bit about the role of FinConnector, the role FinConnector played in the Banco Popular, and as well Banco Fijo, the digital transformation. What were the major lessons learned throughout this process?
Okay, thank you. Let me give you first a little landscape here. As you can see in this picture, some institutions still believe that the game is played in the left-hand side among financial institutions. What has happened in the last years is that progressively telecommunication companies, probably mostly in Africa, fintech companies and FAMGA, Facebook, Amazon, Microsoft, Apple, and Google have started really to take a stake and a very important role, a disruptive role, if I may say, in the financial industry, and everything is being cooked by blockchain and Bitcoin. What these new companies, these challengers in the financial industry have provided, on top of the technology, of course, there are probably two main components that for us in FinConnecta are important when we think about digital transformation. The first thing is they changed and raised customer expectations in terms of a frictionless experience, very intuitive, very friendly, and very personalized. The second thing that they did, they changed the business model. And basically the big changes are they are not the proprietor of all their hardware and software. They definitely opened their API. They established ecosystems. They develop partnerships and alliances. And that permits them to move from a heavy rock of capital expenditure to pay-per-use, pay-as-you-go operating expenses base. So that is a major shift in the business model that basically permits to free up resources in terms of money and organizational effort to do things differently. The other thing that they did is they not only changed and digitized, I would say they not only digitized what was done before, they developed new things. All of the above has provided a scalability and a reach out for these companies that is unheard in the financial industry. We are talking about banks, and not only smaller banks, but larger banks that have, I don't know, 1 million, 5 million cardholders. Facebook has 2.7 billion of users in the world. So when any of these people really set foot in the financial industry, they already have the customer base, and they already know how to introduce disruptive models. As many of the other panelists said, I mean, we talked several times about mindset shift, and one of the things that we really confirm again and again is that when you embark in a transformation process in terms of technology, you are really embarking in an organizational transformational process. You really need to rethink how you do things. What are the assets of the institution? What is the engagement model with your clients? That, as was said before, changes because, I mean, the roles of many of our employees start to change when we really start to do things differently. The culture, the leadership capabilities, the way that we are organized, the talent, skills that we require, all of that changes. This is our customary transformation process that we do in Connecta. Basically, we start with an assessment of where the institution is, and we uncover which are the main pain points along the different customer journeys. And basically, what we provide is several things, and I'm going to probably oversimplify. We own a middleware. We connect through our API layer to the core banking system of the financial institution. So we release the financial institution of the burden of connecting with an external party. We do that for them. And the other thing that we do is we have a marketplace of curated and vetted fintech solutions from different parts of the world. And basically, we present, depending on the pain points, the type of institution, the market, the business model, we provide, we introduce a series of fintech solutions to the institutions that we are working with. And we provide also the sandbox, the regulatory sandbox, to test the solutions before going live. So basically, these are the different roles that FinConnecta plays. I mean, understands and uncovers the needs, presents and introduces a set of curated and vetted fintech solutions, generates the API layer and connects to the institution, provides the corresponding sandbox to test the solution, and then the institution can complete with the solution. And basically, we can do this in a matter of few weeks instead of years or months. One of the things, and I don't have a slide specifically for that, but the majority of the financial institutions that has started to integrate in any shape or form with fintech solutions basically do that on a one-on-one basis. So every connection and integration with a fintech is a project, it's a multi-month project. And when you want to connect the second fintech, you need to start all over again. Basically, what we do is we grant to the financial institution only one integration, that is us integrating to them. And then all the fintech solutions come through our middleware. So for the financial institution, it's extremely easier. It's going to be done only once. And basically, that opens to an array of possibilities in different parts of the world. Going specifically to the case of Banco Popular, through Forward, that is our middleware, what we did with Banco Popular, as you can see, and I'm going to explain a little bit, we connected an ecosystem of fintech solutions to solve an issue of originating loans, agriculture loans. So basically what we did is we integrate a loan origination third-party solution. Another one connected with another one through our marketplace, through our middleware that did all the KYC and AML. We have another solution that basically provides monitoring of what was really going on with the clients of Banco Popular, in terms of the weather, how the harvest was coming, I mean, all the different process, the agricultural process. So there was a monitoring of what was going on after the loan was disbursed. There were, continuous communication among all the parties. As you can see, the chatbot and all the alerting and the notifications, and everything was with a new process that connects everything. As you can see here, this is Banco Popular's core banking system, and you see a different, an array of solutions that connects through our middleware to Banco Popular. Something important is neither of those solutions are located in Honduras. So one of the things that typically financial institutions is one of the beliefs that we prove that you can expand your paradigm and start to incorporate other concepts. You don't need a fintech company to be in your same market to be able to integrate to it. So basically what we provide is, doesn't matter where you are in the world, you can connect with the best solution for the pain point that you have identified. And basically, as you see here, that there is a reduction of cost in several ways. You don't need necessarily to use proprietary developers to develop solutions. Basically, you have teams in different parts of the world, teams that are part of different fintechs that are working with you simultaneously. As you see, doing this with proprietary headcount in a proprietary platform with proprietary solutions could take an enormous amount of time. This was done in several weeks, as opposite of months or years, because basically you were tapping into different resources in different parts of the world. So The acceleration is one of the main components. This is a pay-per-use scheme. So basically, you don't have all your capacity installed just in case. You really, have a much more flexible, scalable, and solution, client solution-facing model. And basically, this is what I have to share with you today. Go back to you.
Great, thank you very much, Helena. I think very interesting, overview of your experiences in Honduras and as well Dominican Republic. We're now coming to the question and answers section. So I would like to invite the participants to send over questions, whatever comes to their mind. I will have a first question or to kick it off for Colleen. You mentioned, and something I think that's something very important is the mind shift and the digital readiness of an institution. Could you elaborate a bit more on that, and as well how you assess this, these two elements in a given institution? You have a long list of institutions you worked with, so it would be interesting to see how you how you assess it for yourself, that the company is ready and willing to engage into this new adventure.
Thank you for the question. Actually, it is very, very important question because if we don't have the right preparation, there will be difficulties with the implementation of the project or the strategy. It is true, microfinance institutions are very, very different in terms of stage of maturity, development, adoption of digitalization, and even the methodologies they're using and the approaches, and the markets are also evolving differently. So assessing what is right is not a unified exercise. Of course, we do have a checklist where we try to understand what are the internal systems, what are the processes, what are the products and services that needs to be digitalized, what are the partners' participation, how they're going to market, like the whole, going back to the whole business case that I mentioned in the past. But a very important moment is that this is not one questionnaire fits them all, because markets and environments and as I mentioned, even the organization themselves are very different in the different markets. Luckily, we do have a lot of experience on almost each market we are talking about, and we try to make sure that we ask the right questions, which in some cases are not related to the technology itself, but as I mentioned, for example, to the market, marketing and engagement strategy. And we have built those kind of guidelines, and we try to gain all of our experience from these more than 70 countries where we are working in, to help the particular MFI to understand like what are the important steps, and to understand where are the gaps in between what they need for the execution of the particular digitalization project and where they are currently in the moment. So it is, of course, there is a standard framework, but there are a lot of specifics that we just try to transfer our experience, and it's part of our implementation methodology.
Good, thank you very much. That answers this question to quite some extent. We have now we have a few questions coming in concerning business models and feasibility considerations. Anybody to take this question is what would be a good effective cost benefit or savings analysis for an MFI in order to justify the implementation of a digital solution. Would you consider this as a solution consultant as well as part of your work to engage in this kind of more commercial questions?
I can take that.
Please go ahead. Yeah.
Basically, for me, is many times small institutions, cannot afford hiring the talent and the tools and best technology. to do proprietary solutions, and in any way, I mean, by the time that you finish paying, it's already obsolete. So faster and cheaper. The faster and cheaper way is opening your APIs and engaging with third-party solutions that basically keep you up to speed with your market and your client needs.
And if I can just add to that, I think, in addition to the business case, there's also the other end where even if they can afford it, they will often choose not to go fully digital because at the end of the day, MFIs are in a high-touch business. Right? So it's not just a question of, being able to do payment services and all of that, but actually craft the credit and saving solutions to the individuals. And if there is one thing that fintechs are often not, it is, having that high touch, even though it's a one-to-one relationship, knowing the customer, knowing the individual in the neighborhood, knowing their business certainly has a value proposition that's hard to beat for institutions who have thousands of boots on the ground.
To add also on this business case question, I would say that more than the business case, it's a question of do or die for many MFIs, because the client base is digitalizing very fast, especially in emerging markets. I would even argue that it's more the case in emerging markets than in Western markets. And really, like now, if the MFI cannot provide this kind of service to his clients, they will switch to another who can do that. So this now digitalization is not only happening in the financial services, but also in the small informal business. And therefore, this is something that the MFI must attend if they want to keep growing their customer base or even keep their customer base.
I actually fully agree with you, but maybe to try to give you our perspective in a more kind of tangible number way, we look at two things: return on investment and how many times for 5 years the investment would be returned. And we advise our clients that in this space, digitalization of financial services, they should be looking for return on investment for less than 24 months. And to be honest, for some of the solutions, it is less than 18 months, which is quite a good turnaround time. And also, we advise them that if the business case for how much they're going to gain for 5 years compared to how much they need to invest to implement and maintain the solution, if this coefficient is not higher than 20 or 30, we do not advise them to proceed. And I know that these are brave numbers, but we are seeing projects where digitalization shows return on investment 12, 15, or similar number of months, and 50 times returns compared to how much expenses are gained. So if you want numbers, this is from our experience a good business case.
Thank you very much. This much for the business consideration. So definitely each MFI will have to have a careful calculation of that. And now I have a question from Mongolia, a medium-sized non-banking financial institutions, and they're thinking about automating MIS and moving to a tablet application. Again, would you have any approach to consider the cost-benefit analysis for that? It's very specific now, so I'm not sure anybody would like to comment on that.
I can take this one as well. MIS, just to make a little bit of disclosure here, our clear understanding of the global trends are that the MIS are getting smaller and smaller in terms of what they do, and they, in most cases now, in all the digital strategies we are seeing, are like a good, robust black box that is sitting in the corner and doing very well what they're supposed to do. Everything else is in middle layer and front end. So here I think the question is for my MIS and tablet app. So my kind of disclaimer here would be maybe you need to double check your architecture, how you're thinking to proceed forward, because you may want to actually do MIS, middleware, and front end, and then untie your hands. But in terms of cost-benefit analysis, if I link it to what I commented before, again, all your investment, if it is something that you can return by reducing costs, increasing number of clients, increasing the services and the revenue from services that you're providing. If you can return that cost within 24 months, we'll consider that as a very strong business case. And that will really depend on, are you going to invest now and pay a license for these systems? Particularly MIS usually is not very cheap. Tablet apps are relatively easy. Or you're going to rent it, because more and more we are seeing that the people do prefer operational cost and software as a service, or even managed services lately. So in this case, the benefit analysis are going to be very different. Depends on the choice you make.
Okay, thank you very much for that answer. We are almost at the end of our webinar. I think we have another 5 minutes to answer additional questions. I have one more here from Somalia. I'll just read it and then maybe one of the panelists take it. How can MFIs meet the stringent AML and CFT requirements in the post-conflict countries like Somalia? Anybody an idea on that? Who has worked in Somalia in the first place? Or to formulate differently, maybe in general, AML and CFT requirements. How do you go about that? How do you integrate this into your solutions?
Well, maybe just a generic comment in that, it's AML CFT regulations are things that financial institutions don't have a way of not addressing if they decide to play at a certain level. So usually these regulations come in a tiered form, where the regulations are much more stringent based on higher amounts, on the sophistication of the counterparty and things like that. So frankly, MFIs and other financial institutions which serve lower income customers, they decide to just stay at the lower tier where the reporting burden is lower, right? Of course, software can help, KYC. It can speed things up, again, from a KYC point of view. But I think it's, at the end of the day, it's a decision of the leadership in terms of at what level are they willing and able to engage the regulations, and therefore, how does that constrain the operations of the institution?
Yeah, I definitely concur with that. As I presented in the Banco Popular case, we can integrate fintech that provides KYC and AML. Of course, part of the sandbox testing is making sure that complies with whatever is required at a country level, bearing in mind that if you are dealing with microfinance clients, you probably don't want to go very up on the checking of AML and KYC.
Thank you very much. Yeah, interesting area, and definitely quite relevant for many MFIs. Maybe in this context, have you run into certain challenges in relation to requirements by regulators in general when implementing digitalization projects, and maybe how to go about it?
What I can say is that the regulatory sandbox that we offer basically also allows the regulators to have a view of what's going on. So instead of a surprise or just presenting a proposal on paper or a request on paper, they are part of the process, and they can really, so it's part of making sure that everyone is in sync and feels comfortable is having a sandbox where the solutions can be tested. prior to going live.
Mm-hmm. Good, yeah.
To answer this and also to make the link with the last question which was asked about having a rigid core banking system, I mean now especially this kind of process which are changing in a very regular basis, you really need to as we were speaking during the webinar, like this middleware and allowing your core banking system to remain relatively stable, and all the parts which are very actively changing, this you should just connect to your middleware and then change only this part, and then keeping your core banking system relatively rigid. For me, it's actually not really an issue that it is rigid, because at the end, the more we are going advancing into this new technology and so on, the more the core banking system will be more of a data repository, where all your financials and so on are stored, and then the part which is really client-facing or user-facing will be changing and will be connected through the middleware.
Yeah, actually, to fully agree with my colleague here, this is exactly the trend I was mentioning, and it is one of the few trends that are all over the globe exactly the same for rigid core banking systems that nobody wants to invest heavily of replacing and etc. are wrapped up, I would say, so with middle layers and such kind of flexible platforms, and all the flexibility that you need is put in the either middle layer or the front end systems.
Okay, thank you very much. I think it's time to wrap up, and yeah, thank you to the panelists and all the participants. I think we had a very interesting exchange on the relationship between IT and business, between the different mindsets and the necessity for mind shift. And I've as well seen in two examples how it works well. So it's an encouraging signal and message, I think, to the many MFIs out there facing digital challenges, and take the courage to implement. It's definitely worth it, and I hope this round has helped a little bit to clarify what the issues at stake are. Thank you very much again to all, and the discussion may continue on the Gateway Links in group and this chat box.